And now to our market monitor, who likes the mid-cap semiconductor stocks he says are poised to do well in an industry that is consolidating. The last time he was on, in May 2014, he recommended Ameriprise, which is up 17%, Cigna, which has gained 76%, and Ingersoll Rand, which is also up 17%. He is Don Wordell, portfolio manager with Ridgeworth Capital Management. Don, nice to have you back. Welcome back.
Oh, thanks for having me.
Are you still sticking with those names that we just mentioned that you gave us back in May, or have you lightened up or eliminated those from the portfolio?
No, actually, we own all three of them still. We think the fundamental stories for all three continue to get better, and especially Cigna. We really like Cigna here for the fundamentals over the next 2 years.
So just repeat your performance here with the picks that you got tonight. I mean, we'll take a 76, a 17, and a 17. You like the
It's that easy.
You like the semiconductor segment. Why?
Well, we do. When you look at our process of dividends, valuation, fundamentals, those are the three things a stock has to have for us to get involved. These stocks all have close to 4% dividend yields. Their valuations are very attractive after the recent pullback. And the fundamental story for all these stocks is very exciting. There's new products. They put semiconductors into Apple iWatches, into automobiles, into a lot of different products that we use, and so they're practically industrial companies trading at very attractive multiples. And so we like the stories fundamentally for the next 12 months.
Let's go through some of them. Your first pick is Cypress Semiconductor.
Sure. Cypress Semiconductor is a company that's going through the integration of a large transaction with Spansion right now. We think that the earnings estimates are way too low in 2016 for this company. Pays us a 4% dividend yield. Operating expenses are coming down. We think upside to $18 a share is fairly easy over the next 12 months.
All right, let's move on to your second one, which is Intersil Corporation. Not one I'm terribly familiar with.
Sure, it's on the smaller cap side. It's about $1.5 billion in market cap. This is a company that has gone through a management change in the last couple of years. Their margins are much better, and we're pretty excited about the future there with the new product on the new Intel chip that's coming over the next 6 months.
And Maxim rounds out the list. You say it's a semiconductor company with dividend exposure to the end market. What do you mean by that?
Well, what we're saying is Maxim has a big dividend. Their end market exposure is, they've got products that go into the Samsung phones. They've got products on the Apple Watches. I mean, there's just some really exciting end markets there that they're involved in. And again, this is an industry that's consolidating, so we think that there's real downside protection here in these stocks. If the global economy were to take a pause here, you've got real asset value, which was demonstrated by the Chinese company bidding for Micron in the last week or so. Shows that these companies are trading way below their asset value, so there should be some fundamental support here.
All right. Well, you haven't steered us wrong yet, Don, so thank you so much. Have a great weekend.
You too. Thanks for having me.
Don Wordell with Ridgeworth Capital Management.